Good morning, guys. Welcome to the morning briefing. And sorry about the late start. We just had some technical issues with the microphone here. So we are underway. So it's pretty quiet today. I'll just start first with the notes I've taken off the news I've been able to absorb this morning. So let's just have a little look at the main notes. So really, as a background, we only have the Asian equity markets have traded mixed. There was a weak lead from Wall Street. So there's just some sluggishness in the process of the US-China trade discussions. We also have a change of leadership in Australia. So with Australia, we have, it's kind of like a dual experience happening there. The trade wars are probably the biggest driver at the moment, but definitely there'll be some ease on the currency now that the leadership has been resolved. So this could be a very interesting time for the Australian dollar. Having come down to the bottom of a really long trend on the daily chart, we could see the beginning of a reversal starting to form. So that can be an interesting one to keep on our watch list. So we have a new Prime Minister, Treasurer Morrison. I know nothing about him. Since moving to Europe, I've lost track of Australian politics completely. So looking ahead, we have so German GDP. I won't be trading that. US durable goods. So that's on the calendar. We'll be looking at that. And of course, we've got Fed's Chair Powell. He's speaking at the Jackson Hole Symposium. So that's going to be very, very interesting. Not really for today's trade, unless something startling happens, but for going through to next week. So I'll be doing a bit of work over the weekend, planning my trades for next week, looking for capturing kind of the weekly move out of this, if there's some interesting news that comes out of the Jackson Hole Symposium. Again, more bad news for Brexit, not breakfast. Chancellor Hammond warned large fiscal consequences. I mean, I would have thought this was a blinding flash of the obvious, but anyway, if the UK leaves the EU with no deal, and he's taking an estimate, the UK GDP could take a hit of up to 10.3%. So I have to see how this little nugget here is going to get circulated around with other people. This could turn into a bit of fear in the markets around the pound if this gets propagated. But we'll just wait and see. So anyway, so Australia had some pressure and was later supported by the news of Treasurer Morrison. So yeah, that pressure's from the US-China, with really Australia being so tied to the Chinese economy, particularly the steel and iron ore China imports in massive quantities, that it would be, we'd be dragged down with anything that happens. So anyway, moving on to some of the charts. So let's just shoot over to, I'll just work through the pairs and where we're at the moment, just on a 10,000 foot view. So if we're just looking at the euro dollar, let's start with euro dollar. So, this market's been trying to correct back up. There's been a breakdown below a multi-week low here, and it's broken back up, and it's trying to re-enter the range here. So we got to keep an eye on this. This is very interesting. If financial markets and the news flow starts to support, a weakening of the US dollar and the euro getting some wind in its sails again, it could be a very interesting area to take a short off the bottom of the range, or just build up a position inside this range with a long bias, which is the way that the pros do it. So just briefly, and if I'm going to look for a movement back up to this resistance area here, if the news starts to change, it's not going to shoot straight up there. It's going to come into this previous area, and it's going to take some time moving around as the institutions build up their long position. So just very simply, buying off the lows, and you can even scale out some at the highs each time it moves up and down, so you effectively create a risk-free position. And this is the way you make money in FX, is building up a large position over tactical entries with very small, sort of like a bird feeding positions, not by taking one big position and punting on the direction of the currency. So this is very interesting. So definitely I'll be watching for some interesting action coming out. So the euro has been getting a nice boost from economic data. I mean, it had the biggest jump in wages for the last 6 years. All reports are saying that the Eurozone economy is on the right path. So just thinking about some of the risks. I mean, at the moment, the euro is, let's get rid of that. Exactly what I was about to talk about next. The euro is very reserved, looking towards Jackson Hole. So really, but we're just looking at hints towards economic policy going forwards out of Jackson Hole. So the Eurozone decision makers are going to be watching very, very closely to see what direction the US is taking. So I'll be following this later today. Let's just shoot over to, oops, go back here. Just pop over to the pound and see what's happening over there. So yeah, at the moment, we've got a possible movement back into this range and then consolidation until moving higher. GBP, USD, boom. So we see here the pound's prodigious movement down over the previous months. So basically the technicals, so the breakdown extended well into the 2600s, or down towards the 2600s, I should have said. Now that roughly coincides with the massive previous resistance zone from all the way back in 2016. So I mean, if you look at this, this is a massive flip zone. I can go into the weeklies here so we can have a little look. Week. Oh, what are we doing here? You have to excuse me, I'm not a trading view person, so yeah, so here we are. So you can see a massive, let's just pop this in here. A massive flip zone, looking on the weekly charts here, from all the way back in 2016. So this is, yeah, this is an amazing level. This is where, you know, when you look at the market, you need to think of time frame participants rather than time scales. So just to quickly run you through it, the main ones are you have the intraday time frames. And these are people that are looking to be flat with risk by the end of the day. And here you have the algos, the market-making algos, and the momentum algos. You have most of the proprietary traders actually, who are trading off the price ladder and order flow. Some of them don't even use charts; they just trade off the order flow on the depth of market. Then you will have some, you know, institutions who are taking multi-day, and of course you've got the hedging that's going on. And then when you step up a level, you get the people who are trading the midterm, so 4-hour charts to about the daily charts, and they have a totally different signature in the market. So they're looking at trading on swings. They're taking the 4-hour swing to the next resistance point, basically. So they're not looking on capturing, 1 to 30 pips. They're looking at 100 pips, 200 pips, 300 pips. And then we go up a level, and we're looking at the people who are sort of what would you call the long-term traders. And, the long-term traders would be 1 group that would be looking. The long-term traders would now be the short-term traders in our set worth looking at, and then we have the position traders who are the time frame above that. So the position traders definitely will be looking at this position here, and you've got all of the major hedges, and you've got the central banks who will be looking at coming in with money flow here. So expect to see a lot of kind of conflicting energy around this level. But what we're looking at the moment is, a profound level. So we could see a recovery, and this would be what I would be looking for, back up to the 2018 high, up around this resistance zone here. This would be a very meaty recovery. So, we have a possible story playing out here with a Brexit resolution and a very powerful movement back up to this zone. So that's another one to put on the long-term checklist. So just looking at the fundamentals at the moment. The pound's been putting in a little bit of a recovery. Let's go back to the 1 day so we can have a look at this. Now you look over the last few days, we've had a bit of a recovery here in the pound. And it's more visible on the 4-hour chart. So this is a nice little punch upwards. So overall, generally things have been looking up. There's been a solid run of economic data. The Brexit, it's two things here really with Brexit. One, people have become desensitized to it, simply. And also it has been becoming milder, the conversation around it. So we're just going to have to look ahead and look for something a bit more certain. I'm not going to get involved here in any long positions at the moment. And, this trend has been claiming bottom pickers all the way down. If you go and look at the retail sentiment, you'll see that the retailers have been long the pound almost from the top here. You go on like IG Markets or FXCM, and I think that Saxo Bank also have a retail sentiment. So, this is a classic example of what you don't want to do, which is thinking it's gone too far, it can't go any far, I'll take the long trade now. And they just look for a small reversal of the first place that a whole bunch, oh, look at that, how nice, a little, reversal style of bar here. And of course here, boom, it pops back down. This is also a reason to follow the fundamentals. If you're just looking at the technicals, hey, wow, look at that. That could be good. Although, if it's just the technicals, you see that it's just been impulse moves all the way down here. So, and then, of course, it moves down again. And we have this nice consolidation area. And the person that's lost out here is saying, you know what? I'll just take a trade down here. So they jump in here. And hey, presto. What happens? Bang, another move down. Damn, I really want to. So they take a revenge trade down. This has to be the bottom. So I'll go in with triple to say, oh, yeah, fantastic. It's moving up. I'll just get out when my overall position is at break even. And then, of course, bang, down it goes. And, the really silly traders will say, this is look, this would be a divergence. You don't need to look at an indicator to see this is a divergence. This move down isn't as powerful. This one. It's a weaker one. This is a weaker one again. Let's see a nice divergence on the charts. Bang, that's a love. And then bang, of course, down it goes again. And game over. So, yeah. So looking at the pound now, we would have to see a resolution of Brexit for looking for a long trade. And we'd like to see, we want to take the middle out of the trend. I'm going to let everyone else get in and start moving this up and then buy it on a pullback. But, nothing from a long-term perspective at the moment. Just check some of the settings here. Okay, so let me just pull up the chat. So USD JPY, let's have a little look at what's going on there. So we have some interesting stuff going on here. So look, you know, the medium-term outlook is still favoring lower tops and lower lows. Boom, 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 boom. We are looking at, if we get, you know, we've got this 110 level here. You know, I mean, if it hasn't closed under there, you know, came down, tested, rejected, it's moved up again. If we had got a close under the 110, I would have seriously been looking for some shorts here, with a fundamental, you know, wind in my sails behind it, of course. But we've convincingly rejected this level and we've moved back up. So, you know, the overall fundamentals at the moment, it hasn't been moving much on domestic fundamentals. It's been sort of dragged around on the traditional drivers of global sentiment and positioning on the US dollar. So the usual risk on, risk off. You know, the drama, it didn't get much of a reaction to the drama with Trump. I mean, everyone's become desensitized to that. So, you know, we'll be looking at Deputy Governor Wakatabe is going to Jackson Hole instead of Governor Kuroda. So we'll just be listening to some of the dialogue coming out of there for some hints. You know, if there are any shocks around the Japanese yen, we'll be looking at the yen as a possible pairing for one of our trades. Okay, so on to the Aussie dollar. Now we've got a very interesting market here. You know, from a fundamental perspective, you have this huge trade war drama which has been happening in the background, and there's this. You can see in the yeah, that would be ditto from me. That was just Chris from the room sending me a message. We've had this amazing move down, you know, since effectively 2018 began, and you know, this is driven by falling commodity prices. We have the trade war drama that's happening. We've had political uncertainty in Australia. And we've also had the main driver, which has been, you know, the Australian dollar just isn't as attractive anymore with, it used to be the darling of the currencies with its high interest rate and stable government. But now with this hiking cycle happening in many of the economies, the shine is going off the Australian dollar more and more. And add in the confluence of a trade war with China, which is attached to the commodities area, and also the political instability. It's been a bit of a joke of a government in Australia for a long time now. We've had this slow and steady decline. You know, beautiful trend trade. You know, selling the rallies all the way down just works absolutely perfectly. But we're coming to a bit of a line in the sand here. So let's just zoom out a little bit. I can remember this time, you know, going overseas and having to exchange my dollars. I can remember this 73-cent level very well, you know. And you just look at how it's flipped over the years from 2015. It's a real line in the sand just here. So this is very, very interesting. You know, we had a breakout, but then we had a break back into this range. Yes, we had the movement down. But we've got extreme trade war fears flashing backwards and forwards at the moment. And yeah, it's very interesting. So we've just had a change of government in Australia. So this could bring a fresh raft of financial initiatives, which could see the Aussie dollar strengthen. This is definitely on my watch list for a reversal and move back up to the heights of the beginning of the year. So, you know, I mean, on the short term, if you look on the 4-hour chart, you know, this is looking kind of bullish. So, you know, on the 4-hour chart, we've had, there's been renewed trade talks between the US and China, just in the background. President Trump's complaints about the Fed rising interest rates has sort of put a vibe out there that they want to talk the dollar down, and perhaps some uncertainty about future rate hikes in the US economy going forwards. Just reading through the news feed here. I'm putting this on the watch list for a movement back up into the trend area here. You know, this is a nice pair to look at. You know, we've just had a massive sea change, and if we see a breakthrough in the trade talks between China and the US, we could see a very nice, strong move back up into this zone. So, yeah, that definitely goes on the watch list. Okay, USD CAD. So the market's been trending up in 2018. We've had that prodigious dollar strength. Let's just go on to the daily again. $2018, boom. You know, this has been a real star this year. US dollar, CAD, NAFTA talks, various things going on with the interplay between the two countries. So, you know, let's have a look, 130, 133.80. At the moment, it's entered a corrective phase. Now, we took a trade on this pair in the room on a massive surprise that the interest rate, the inflation rate is actually a lot higher than the government was expecting. Their mandate is between 2 to 3%, but you know, it's on 3% now. It just hit 3%. But with the reading that high, they're gonna have to look at taking some action. So, you know, it increased the chance of an interest rate hike considerably for the September meeting. So we're seeing a little bit of a corrective phase here. You know, obviously with the Canadian dollar strengthening, you see the USD CAD moving down. But so going into next week, I'll be looking for conversation out of the Jackson Hole. And with the CAD, I'll be looking for a currency to pair it with. So, you know, the previous candidates we've looked at, maybe the Aussie dollar, maybe the Japanese yen. We'll just see how the macro plays out over the weekend and over Monday. But this is a very interesting currency to look at. So we're just looking at the fundamentals. There has been, as I mentioned, solid economic data. There's also new optimism around the fate of NAFTA. So there's been a recovery in the price of oil. It's coming off its best daily performance in 2 months. So we're looking at overall positive. So we'll just have to put this on our watch list. This is, you know, Canadian dollar is the currency that I'll be looking for coming into play next week. Let's just pop over to NZD. Again, US strength, New Zealand dollar. So this is a, you know, 2.5-year low down at 6545. So this is looking very bearish. There have been some strong Kiwi retail sales. There's been profit taking on US dollar longs as well. So, you know, again, Jackson Hole, look, it's going to be the US dollar deciding the fate of this pair at the moment. There's really nothing in the foreseeable future with the NZD that's going to affect things too much. So this is really sitting in a neutral basket at the moment. Possible pair to pair something with. And then I think we'll just have a quick look at gold, because that's looking pretty interesting at the moment. Okay. We've had a recent run of declines. But it's, you know, we have some potential here, carving out a base off the lows over here. So I'm just scanning through the news feeds here. There's nothing really happening. Now, let's go out to the weekly chart and have a little look, because that could be more. So looking at the weekly, we can see that. Let's have a look at previous declines and how they've played out. You know, we've had a sharp impulse move down here, followed by a very quick reversal, and then a slow trend up. So yeah, I wouldn't at all be surprised to see gold entering into a large ranging environment here, as we have the back and forth of the, you know, the geopolitical and, you know, Bitcoin flavor of the moment, not flavor of the moment. Really, we don't have any major war threats on the horizon at the moment, but a crisis could come out of somewhere, out of left field at any moment with North Korea. So I wouldn't be surprised for it to, you know, you look all the way back to 2016, it's been contained within this massive zone here. So we could see a test back down to have a go at this level again and then a move up, but I would see large swinging movements within this zone here. So really not a lot of use to us at the moment. So I'm taking gold off the checklist at the moment. A little look at Bitcoin. Oops. Yeah, the weekly chart on Bitcoin, it's a thing of beauty. Okay. So Bitcoin is in a really interesting place. So, I mean, this is the place when you see an instrument constantly knocking on the door, like Bitcoin is knocking on this zone here, you know, a massive psychological 6,000 level. Usually it's knock, 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 come in. You know, it knocks 3 times and then it breaks through. So it's really interesting how Bitcoin is really coiling up its energy here, ready for a movement. So, you know, really only a break above the 8,490 would really trigger a bullish move to me. You know, we'll look at this previous swing area here. If you get this break, I wouldn't be surprised to see it move very swiftly back down to 3,000. Yep. 3,000 would be, let's have a little look at where 3,000 is. So we have a nice little flick here. This is what we can see. So, you know, it's a very it's a very sharply swinging market when it does move. So look, not going to trade the breakout, no way. But this is the kind of movement that's going to have ample chance to get in on the pullbacks. So I'll be selling rallies all the way down to 3,000 if Bitcoin, you know, falls on its sword. I mean, it's doing its best to try and hold up above 6. You know, just in the back of everyone's mind is this massive decline. SEC recently, well, it was delaying its decision on a cryptocurrency ETF, but I'm just reading here on the newswires that it's been rejected. So I'll have to check up on that a little bit more. We also have headlines that China has banned all crypto-related commercial activities. So that's a lot of negative pressure weighing on this cryptocurrency. But of course, Bitcoin being a fintech, a breakthrough instrument, every day there could be some surprise breakthrough, or there could be some, some new surge of interest in cryptocurrencies. So we just don't know what's going to happen here. But really, the amount of positioning, the number of stops below the 6,000 level, or down to 5,500 level, I would see a very sharp move, and I think a very quick move down to 3,000. So that's definitely going on the watch list at the moment. Okay, so just wrapping it up, these are the interesting currencies to look at today. I'm going to pop over to the economic calendar and be quiet. We've got 230 durable goods. I'll be covering this. So I'll run you through that. There'll be another live stream then. Also monitoring the news. Yeah, it's pretty quiet overall. Reading up on Jackson Hole, I've been going into, I've got access to hedge fund research, so I'm going to be doing some research later this afternoon and posting it in the trading room. Let's have a little look here. Yep. So I'll meet you guys back in here in 3.5 hours for US durable goods orders. And if you have any questions about today's stream, please put them into the chat area and I'll get back to you. Okay, thanks very much. We'll speak later.